Right, guys, how you doing? This is Israel. This is Israel Keys Wealth Academy. For those of you who aren't aware, I've been on holiday for about 3 weeks. Well, holiday, a working holiday. I left the country. I was in my birth country of Nigeria, doing some charity work, some business. A different subject for a different day. And while I was away, I haven't put out any recordings or any webinars, and I'm itching to get back. True story, I actually forgot. Well, first of all, my main laptop crashed when it crashed, something happened to my display of my MacBook Pro about a week before I left. And so I set up my backup laptop, which I had for situations like this, got to Lagos, Nigeria for a few days. And then I went on a trip to the north to Kaduna and Abuja, and I forgot my charger. So for about a week or so, I had no charger. And I couldn't use my laptop, and I was having to trade and send signals or commentary on the WhatsApp group. For those of you who don't know, in addition to the free videos that we put out on YouTube, we also have an inner circle membership, or should I say a VIP, a mentorship group. What we do for those different levels, some of you pay for one-on-one tutoring. So we have webinars one-on-one where it's just me and you in a live chat room. If you live in London and you want to come down to my study or my office, you're free to come sit with me, but we usually do this by webinar. And I work with you where you are in your trading and design a system of improvement for you. So I do the lessons tailored specifically to where you are, your experience level, your results. The next level down from that is a paid monthly membership. We're actually in a trial season between now and the end of December. If you get in, you can get in for £65 a month, which is cupcakes. I mean, we're doing that because we want to use the first intake of this monthly mentorship to work out some kinks, to put together an online platform that's pretty much a university of trading. And so if you get in early, you get the £65 fee for the first year, after which then everybody goes on to the regular fee. It will be £130 a month. For that, you get a live trading community. You get fellow traders to walk and talk with. You get to be part of a WhatsApp group in which we're constantly giving analysis and discussions and signals and experience. But then you also get a structured course, which is designed to go from beginner all the way to advanced. And so whether you're trading for the first time, or you've been trading for years and your results aren't what you want, or you've been doing pretty well, but you want to get to the next level, I guarantee you less than 5% of all traders worldwide have the insight and the understanding of the markets like we do. It's cost about £30,000 in losses and training fees to finally arrive at a place where, and if you're looking at my screen right now, I'll explain, but that pretty much is all we need now. We need vertical lines and horizontal lines. We need to know price levels and times of the day, week, month, or year. We don't do wedges. We don't do trend line breaks. We don't do momentum. We definitely don't do indicators. We don't calculate daily pivots. We believe we have cracked the system of how the markets work. And we give it to you in a very clear, concise, and easy to learn way. It's not rocket science. My biological mother, the woman who gave birth to me, in less than a month of just following the stuff that I put on our WhatsApp group, is already trading profitably on a demo account, making somewhere in the range of about £1,000 a day, $1,000 a day, which is just phenomenal. Now, if my mother can do it in 3 weeks, if you're millennial or not too far older, then you have no excuse. And so I've been having to use my phone, like I said, while I was away, but now I'm back in my office, and it's beautiful to be able to look at my charts with all my levels on my computer. So very quickly, I want to go through a brief recap of last week in the markets. Usually every week I do a recap of the week before, and then the week coming. I haven't done that for 2 weeks. So here we go real quick. I took the liberty of marking up my charts in advance on a pic and taking a screenshot of them. So that way we can just go dive into the information real sweet and straight. I've also got my live charts open, which I will refer to as needed. So real quick, so this is going to be a snapshot because I really need to get some sleep and get ready for my busy day tomorrow. Now, if you look at my screen, it may look like just a bunch of lines to you. lines of different colors. And you might think, this is the busiest chart I've seen in my life. You wouldn't be far wrong, but you would also not be right at all. So first of all, let's do it this way. Let me explain something to you. Every line, the first thing you notice now, if you are part of my mentorship group, or you have watched my videos before online, then forgive me if I'm going over the redundancies, but I do realize that every single time I put out a video or training, a recording, the people who are either coming into the mentorship or finding me on YouTube for the first time. And if this is on YouTube or you're finding this, please help us grow the channel on YouTube. We're trying to get our first target to 100 subscribers. We're about roughly 82 now. YouTube won't let us do much with our channel until we reach 100. So please do subscribe. We would be very grateful for that, and spread the word. There's some great quality content on there. So every single line you see on my chart has a purpose. First of all, you notice that there are no fancy indicators. And this is the way I trade live. Let me show you my live chart so you understand what I'm talking about. Let me just switch the screen. I've got several screens here. For those of you who actually do come and get some lessons with me in my office, it's beautiful. It actually looks like a live trading desk. So there we are. So this is my actual, these are my charts for real. Now this is a demo account. It's what I always used to teach. And disclaimer, all the stuff I teach, I am assuming you are trying them out on a demo account. Do they work live? Yes. Do I make money live? You better believe it. Will you make money live? Yes. But as a disclaimer, I will not, all my mentorship students know this. I tell you, don't try my stuff out on a live account. Get comfortable with the concepts I'm teaching on a demo account. And then when you are confident in them, adapt them to your own system and then trade live. So I'm teaching you how the markets work. And some of you will confess to this, that I'm showing you sometimes to the pip where things happen. I'm not talking about 30 pip zones. I'm talking about levels that are usually within the range of the spread, 1 to 2 pips. We're talking about 5 pip stop losses sometimes, you know, risk to reward ratios of 4, 5, 6, 7, 8, 9, sometimes days or weeks 10. And you guys have seen me do this in the group. We're talking about in advance, 3, 4, 5 days in advance, calling a change in direction or a move to 3, 4 pips of the spot, and predicting where it will go first before it ends up somewhere else. So these are pretty advanced concepts, but I am assuming that you are testing them out on your demo account. And when you're confident with them, you trade live. But I take no responsibility, nor does Israel Keys Wealth Academy and any of our instructors or mentors here take responsibility. So don't blow your live account and blame it on us. Now that that's out the way, you notice that there is no indicator on my chart. Now there are actually 2 very powerful indicators on my chart, but they're not what you call regular indicators on my chart. The only 2 types of indicators I'm interested in are a vertical line and a horizontal line. I repeat, there's only 2 types of indicators that I'm interested in, and that is a vertical line and a horizontal line. Why? Because when we trade as technical traders, we are trading a chart that shows us time against price. The horizontal scale is the time scale. The vertical scale is the price scale. So all we need to know are point in time, which are the vertical lines. Sorry, I just had a cup of tea and my stomach seems to be bubbling. There's some caffeine in my system, so I got tea instead of coffee. You need to know point in time and price levels. And so you see throughout all my charts, you constantly see horizontal lines, either across the whole chart, which means they're coming from way back in time, or across a space of time, like the dotted lines or I wish I could show you these, but I just, these broken lines you see there are delineating either certain times of the day, of the week, of the month, or sometimes the year, depending on the time frame in which I'm doing my analysis. I personally like to trade intraday and intra-week because my attention span is liable to get bored easily. If I stayed in the trade for a week and a half or 2 or 3 or 4 weeks, I'd probably do something silly just out of boredom. And so I like to be in and out either in a session, meaning 3 or 4 hours. I don't scalp in the sense of the real definition of scalping, which is being in the market for 4, 5, 10 minutes. But I like to get in and out within a session, in and out within a day, or at worst, in and out within a week. And so my personal style is what I analyze by, but the concepts I teach you can use from position trading. If you want to put in a trade in January, come back in March or April, get your profits. My concepts will work for you. If you want to put in a trade on the first week of a month and come back in the last week of the month, it will work for you. If you want to come put in a trade on Monday, come back on Friday, these will work on all time frames, all styles of trading, because the market is one market and time is a fractal. A price is a fractal, means it works the same way on all time scales. Disclaimer, I've been doing this for 12 years. I've got several mentors and people I've paid over time to learn from. A couple of them, Chris Laurie, Michael Huddleston. Those are primarily the two people that I have gotten the vast majority of my concepts from. A lot of the free work and free stuff, but I've spent hours, days, weeks, and countless dollars losing in the markets to learn some of the things that I teach now. So no one can actually take full credit for any of the stuff that I teach, because while the foundational blocks are primarily the people primarily responsible for those two men I just mentioned, Chris Laurie, Michael J. Huddleston, also known as the Inner Circle Trader, who I love, can be a bit eccentric, but I love Michael. 60-70% of the stuff I work with now was me taking the things they taught to the next level by my experience, which is what they said to do anyway. All right, so and a couple of other times where I paid money for stuff that I wish I hadn't paid for now because it was absolute rubbish. So quickly, now that I've given you a brief spiel about me and us, and hopefully a shameless blog, so that you can email or DM us on Instagram at Israel Keys Wealth. You can email us at fx@israelkeys, fx at israelkeys.uk to find out how we can help your trading journey. Let's go straight into it. So last week was a funny week. The week before, so this is how I usually will start. I'll usually start my analysis on a weekly chart because, like I said, I'm usually an intra-week trader at most. And so the first step I'm looking at is, what do I expect price to do over the next week? Now, the last few weeks have been very interesting because while price has been moving several hundred pips either way, we've really been in pretty much a consolidation for about a month on the weekly chart. And for those of you who've been on YouTube with me or in our mentorship group, you realize that we pretty much called the last 5 weeks almost pin drop perfectly. We call this week as an up week. We call this week as a wild up week. We called a retracement this week. We were a bit ambiguous about this one because we weren't really sure what a price would do. But once the week started, we knew where it was going. And then the week before this past week, we called the dip down into this level. So now this is an EU, by the way. So we called the dip down into this level. If you don't understand why I'm drawing what lines on my charts, go back and watch my previous videos. But you will find all the information there, and you will perhaps need to get in touch. I do actually have a free mentorship group, a group that I don't charge anything for. They get to be part of a WhatsApp group where there's some activity going on. You can start from there to see if we're of use to you, and then build your way up to some levels of paid tuition or membership. So we call this dip back down into this level. And once this was satisfied, we mentioned the fact in our group that this past week was going to be a bit ambiguous to start, but once we began, we would know what was going to happen, and we were correct. So as you can see, almost to the, well, not to the pip, because this is a weekly chart, but you can see that level there, we called that, and we also called this level as well, about the fact that we expected price to revisit that level. And so if you drop down into a daily chart, this is what it looks like real quick. So again, this is euro dollar EU. So over the last few weeks, it's engulfed on the daily side. It's run up. It's cleared out this high here. At the point at which it clears out this high here, we refer to that as a market structure break. We expect it to dip back down into this range. I'm going to put a Fibonacci there just to delineate what the range looks like, just ignore my levels. I'm not necessarily doing this to show you the levels per se, just want to show you the range. And most traders know what a Fibonacci is. If you don't and you're a beginner, get in touch with us and we will gladly take response. So when this began to drop, we expected it to come down to at least the 61.8 level. Now, I am wildly suspicious that this could very well take another dip back in next week first. Now, the moment we broke this level on the daily, we expected to be bullish. And we will retain that bullish overall bias unless this level is taken out. And even then, that could simply be a stop hunt. If you look at this on the weekly chart, this is it here. So there's a weekly engulfing, which is a very powerful directional bias. Again, I don't have time to explain all my nomenclature. Get in touch, get in line with the mentorship. But a weekly engulfing candle is a very powerful directional bias, but we expect a retracement. Price doesn't go up or down in straight lines. And so we expected a dip. It false dipped here, came back up here, formed a double top, which if you learn to trade from the masses, you expect that to be a very strong bearish signal. I beg to differ. I am actually of the belief that this is creating a pool of engineered liquidity that I expect price to come back and claim. And when I see a reaction that forms neatly at the 61.8% level, that for me is a powerful sign. Now, I am aware about the fact that there is a consolidation pocket here, which could be a very powerful draw or pocket of liquidity, as I call them, or liquidity profile, as I call them. Again, no time to explain what I mean by that. And so I would not be surprised to see price dip back into it. But it's perfectly okay for it to run up here. It satisfied that initial thesis of a 61.8% level. And so the whole of this week, now if we drop down, and once that came down here, you see again another powerful directional pattern where a bullish engulfing candle first clears the low of the last candle and then retraces. So it opens in the range of that trading day, the previous trading day. I'll show you in a second. It goes on and clears out that low, comes back and closes above the high. That is money. And that happened on a Thursday. So what did the week look like? If you drop down to a 4-hour chart, every divider on a 4-hour chart is, I'm going to get rid of the Fibonacci now. I just needed it to show you the 61.8% level and also the range, because one of the reasons why newbie traders lose money is they always lose sight of the bigger picture. And so you get so bogged down in your 5-minute chart and you're staring at every single price jump up and down and you're so excited. Or your 15, or even your 30-minute, even your 1-hour chart, even your 4-hour chart. If you are trading, even if you are scalping, you should at the very least be aware of where you are on the daily chart. And if you're trading intraday or intra-week, you should at least have the weekly chart. If you're a swing trader, you should definitely have the monthly chart as well. I don't trade swing, and I realize that most of the key levels in the month I can plot on the week. And so because I'm lazy like that, I developed a system where I know what levels I'm looking for in the weekly chart that are mirroring certain levels in the monthly chart as well. So I usually start from the weekly. But if you're a swing trader, you definitely want to give the monthly a look. But even if you're scalping, at least be aware of where you are on a daily chart, because these are called institutional charts. The banks, the central banks, the market makers, the billion-dollar hedge funds, George Soros, Warren Buffett, and the rest of them, they're not staring at a 15-minute chart. They're not risking hundreds of millions and billions of dollars and tens and hundreds of billions of dollars. 5 trillion traded daily on the foreign exchange markets. They're not risking those on the little zigzags on your 5-minute chart. They're keen of levels on the daily, the weekly, and the monthly. And so you want to at least be aware of where you are in those schemes or in that scheme of things. But we come down to a 4-hour chart. So this was the week before. So like I said, we called these all perfectly. We called this week going up. We called this week going up. We called a little retracement this week. We kind of expected it to keep going down the next week, but it played us a little bit. But the moment the week started and we developed a system not to get caught out by false moves, we were able to get in sync and go long and make money. And then the real downward move, which we expected to happen 2 weeks ago, happened last week, the week before last. 3 weeks ago happened the week before last, and came down into these levels. We were looking at this level here being a very key level price action, that level there, based on that 4-hour close and open. But also, we wanted that to be confirmed by the actual low of this candle there. Why? Because this was a stop hunt that triggered a long move. So as you see, this candle took out that low there on the 4-hour chart and went long. If price comes back down and breaks it, then it's a very significant thing. And it did happen. So we were waiting for that. All the way being on my trip, I was scalping because I didn't have my charts to look at properly. And so I could only really trust the trade per sessions. But this happened. So price kind of jerked us one way, came back another. Tagged that level on a Thursday. And if you are my mentorship group, I literally screamed at you buy on Friday. And not only did I scream at you to buy, you already know if I work with you personally or as part of my group, how to buy. And just to repeat that real quick, this really is worth thousands of, perhaps millions of pounds in the right trade of a lifetime. But I'll give it away to you for free, just to build some trust with you as your potential future trading mentor. Any candle on any level, and I learned this from the free work of Michael Huddleston, which is called the Inner Circle Trader, which is why I can give it away, because I got it for free. But I really refined this to some real deep levels. But the general gist is, a weekly candle shows up as a 4-hour divider. A daily candle shows up as a 1 hour, 30 minute, 15 minute, 5 minute, or 1 minute divider. A monthly candle shows up as a daily divider. So if I take a daily candle, it has an open, a close. If it's an open or close, a high and a low, bearish or bearish. If I drop down to 1 hour chart, that's what I'm looking at. This here is a candle. That's the daily candle in this. Just put this in there to show you what I'm talking about. This is 1 day. We go back to the daily time frame, you see it. That's 1 day delineated. And so if it is a bearish day, you will have an open, a close that is lower than the open, but a high and a low at extremes. And if price on a candle is going in one direction, it is 99% of the time, with the odd exception, going to first move in the opposite direction to build liquidity before coming down. It does two things. One, it engineers liquidity by faking out inexperienced traders. So when you see this coming here, if you get the daily or session or period or weekly bias correctly, you're going to sit through drawdown and probably collapse your trade for a loss. Secondly, they need liquidity. If they want to sell billions, they need to pair orders with people willing to buy. Where are the people willing to buy? At previous highs or lows or liquidity pockets, as either stop losses. So those who sold here, are going to have a stop loss somewhere in that region. When price comes back up there, if they sold, their stop loss will be a buy stop loss. When they are forced to buy to collapse their trade as a stop loss, the market makers will then get huge portions of liquidity to sell. The other option is what we call breakout trading, which is why those of you who do trend line breaks and all that kind of stuff, you drive me crazy. Let me show you what they do to you. So you're going to draw your trend line like this, something crude like that, right? You're going to see it break out with this huge Marabuza candle. You're going to be excited. You are probably going to sell here or here. Or if you're a momentum breakout trader, you're going to wait for price to come to this level to sell. And once it tags that level, you have dreams of running to the bank, because in your mind, price is going to go all the way up and make you 100 pips. No, it's not. They just engineered liquidity. This was really a down day. How did we know it was a down day? By looking at the daily calendar, the daily, time frame, and the weekly time frame. We got the direction of bias correct. And so on this day, we knew we were going to be selling, but we were waiting for an engineered liquidity run. Where it will go to, we really don't know for a fact, but we have an idea. It'll be somewhere in one of the previous 1 or 2 days range that is obvious, and that was there. We get the reaction we're looking for. Bang. We are selling. The blue line is where you buy or sell. The red line is the stop loss. The green lines are the profit levels. And that day alone, we would have made 1, 2, 3%. The next day would have gone to 4 and almost 5%. And if we held on later into the other week, would have had some amazing pickings of up to about, let's see, so that's 1, 2, 3, 4, 5, 6. We go up to about 7 hour to hour, 7 to 1 risk to reward ratio. Anyway, so that's the gist of how we do it. So come back to this past week. This is where I'm going to move you now to the picture that I've already done to mark up the levels, because I didn't have the time to keep drawing up levels while you were staring at me. So let's go back to that. Good. So here we are. So on my chart, the brown, saddle brown levels are weekly levels. The green are daily levels, and the purple are 4-hour levels. These are pretty much the only levels I work with on my charts, because I'm trading off the 1 hour and 15-minute time frames for entries in my trade management. And so I've gone through, I don't have time to show you, but I went through my weekly chart, my daily chart, my 4-hour chart, and I tagged certain key levels over the last, I do this every month. So the start of every month I do it, and then the start of every week I add some new levels that formed that week. And so you're looking at pretty much 2 weeks or 3 weeks worth of levels on my charts as we speak. Now, bear in mind this, let me put this at, that week would not have shown. So this is where we would have been to start the week. You would not have seen anything past that point. And so we had this week here, which is very key, which is where this move started. See there? There was a 4-hour stop hunt that engineered liquidity that shot up, came to that level. It came down, and it really wanted to come down here. There was what I call a manipulation week to fool the uninitiated and some of the initiated who are just too impatient to wait for confirmation. But really, they knew what they were doing, and then they came down. Also, this here engineered some liquidity at this level, because this intermediate low here would have had stops building there, would also have had momentum traders waiting, and also here would have given, I can't draw down this chart, but there would have, on this picture, the trend breakout traders would have been excited at an upward move here. And so when the week started, based off the weekly, we knew this, as we said this in the group, we knew this was going to be a pretty much indecisive week, but we expected some bullishness. But we had some levels we had drawn out. And so we expected price, like I just showed you, to revisit this level. Let me actually adjust that a little bit. So that there is the liquidity profile. And so price dipped into it to start at the end of last week. Actually, let me refine that a little bit, because that's not really the full one. This is it here. There we go. There we go. That's it right there. And if you're wondering what it is, let me bring you back to, actually, I'll just take that away and show you what it is. So this is what it is. See that candle there? This black candle here is what we call an order block. But this white candle inside, the top of it, for me, would be the top of my liquidity profile, as I call it. In essence, that's where I know the liquidity pool or pocket starts from, and then all the way down to the close of that candle. And that 4-hour level, that's where we got that from. And so I'm expecting price to also, there is a confluence with this one here. If you look here, this is another one down here as well. And so the question was, would it respond to this one or that one? The answer is somewhere in between. Why? Because when you see these liquidity profiles, in this case, an order block, if you use the language of Michael Huddleston, or a demand zone, if you want to use Chris Laurie's language, pretty much saying the same thing. When you see them neatly overlay like that, price loves to do what it just did here, which is tag the liquidity beneath one, take out that low, because there'd be significant stops resting there. Why? Because this is not just any intermediate low. It was a stop hunt that drove price higher. So it would usually be heavily defended. And if you were to get, I'm assuming that a fund, if not a bank, would have had a lot of stops there. Anyway, price comes there, tags it, and it tagged it on a Thursday. So let's drop down to the 1-hour chart. Now, blue is my 1-hour level. You notice that there's not a lot of blue here. I only put 1-hour and 15-minute levels at the point at which I am about to enter a trade. And so this was a Thursday. This is the zone in question that we were talking about. This happened on a Thursday. Now, my team was expecting this anytime from Tuesday. We knew it wasn't likely to be a Monday. We thought it was going to be a Tuesday or Wednesday. It kept us waiting till a Thursday. But the moment this happened, so price came down to that level, swept it, and then rejected sharply, taking out that 1-hour high. Now, why 1 hour? Again, these are my discoveries. This is why I say, find what works for you on a demo and then go live. This is the way I work personally. I teach my students that you need to have a scenario. Every trade needs to have 4 things: a scenario, something you're looking for based on your understanding of price action that gives you a trade idea. You need to have a signal. A signal is something that happens that tells you your idea was right. So for instance, my scenario on the 4-hour chart was that price came down to that level. That was a scenario. I expected that level to be tagged. The signal was this rejection, the market structure break on a 1-hour chart. That was a signal. You then need the third thing, which is an entry pattern. So this is how I trade. So I use a weekly and a daily chart to develop my scenarios. So to develop my, to give me an understanding of where I am in price. That's where I am in price, to give me a concept of what to expect. I use the 4-hour chart to give me my scenarios, which is something happens on the 4-hour chart that tells me what I suspected from the daily and the weekly was right. That's my signal. So price hitting this level, 4-hour level, which is why the lowest level of line I have on my charts running across is a 4-hour line, a purple line. Once it gets there, I wait for, so that's my signal. Also, part of my signal in this case was it clearing this 4-hour level, then rejecting to the upside and making the market structure break on a 1-hour chart. Why a 1-hour chart? That's how Israel has internalized price action. I have students and I have partners. One of my partners, one of my instructors in the Wealth Academy is an amazing trader called Tokbe. He's developed a brilliant system called RTO, and you'll be hearing from him in the next few weeks. Tokbe works his signal purely off a 4-hour chart. He doesn't need the 1 hour to give him his signal. I need both the 4-hour level and the 1-hour market structure break. But that's how we see price. We internalize price action 70 to 90% the same way, but we express it slightly differently. Every trader, you know you are ready to trade live when you have your own flavor, when you're not just copying and pasting somebody else's stuff. Anyway, so that's my signal. I then need an entry pattern because I didn't enter the moment this crossed this level. Because to do that sensibly, I would have had to put my stop loss in one of three ways. Now, the reason why I have these lines of this chart, first of all, is for me to know when price reaches certain levels, and all these lines are previous levels in time where price did something significant. And if you, well, I can only show you what's showing on my chart at the moment, but you see that every single line is tagged multiple times this month. From the 21st of October to the 15th of November, look at how each line has at least 3 times price touches it. But these lines came from over a month, in some cases a year ago. Because like I told you, the only indicators you need are vertical lines, time of day, week, month, a year, or horizontal lines, price levels. So I have my lines there, one to give me signals. Secondly, to also give me entry and exit ideas. Because each of these lines would be a place to either enter a trade or put my stop loss or take profit. For instance, I entered on this blue line on a Friday. I'll show you that in a second. But I could have put my stop loss beneath this brown line and I would have been fine. I could have taken my profit at this purple line and it would have been perfect. And as you can see, this line where price closed for the week was drawn last week from something price did. This was when I drew the line. A week later, price rewards me. And this is how I look like Nostradamus. It's not rocket science, right? But now I need an entry pattern. And it's something to tell me, get in here, get out there, and hold or do this along the way. For that, I will go usually to a 15-minute chart. Why? That's how Israel likes to trade. And as you can see on the 15-minute chart, it's a thing of beauty. So on Thursday, price hit our level. We expected it on Tuesday or Wednesday. It came close, but didn't get there. We did not chase price. We don't say, well, this was roughly about maybe 3-4 pips difference here. We want, price is specific. It gets to the level, reacts sharply, dips back in and reacts again. I actually traded as a scalp a little bit of this action on a Thursday, but I didn't give it as a signal. I only give my groups signals I can put my money on. And so if I want to try something out and risk my own money or maybe do it on a demo, I'll just show you the results after. But if I tell you in real time, buy, and I tell you buy here, put your stop there and sell there, I'm batting roughly about 80% accuracy with at least 3-to-1 risk to reward ratio. Don't believe me? Check out my Instagram page and ask my students. But this is how the magic happens. See this level here? This was the high on the 15 or 1 hour chart that sent price to that level. It bounced off the reaction and cleared that level. It's classic support or resistance turning support. The next day, at a predefined time in the day, which I don't have time to show you right now, but a window of time in the day which my students are aware about, price gets back to that level and gives a reaction. This is my 15-minute zone color. And based off what price did forming a liquidity profile at that level the previous day, it comes back in, tags it, comes in and hits that line. And we are in, or we were in, literally 1 pip above the zone. 1 pip above the zone. I repeat, we were in a pip above the zone. In fact, I was in at the exact zone, but I tell my student to pip above. Now, let me move the screen share back. Right, so show you the trade as it actually unfolded. Again, these are some of the lines, again, that I drew. I usually have one chart with all my fancy color lines, but then my execution chart literally has slightly fewer lines based on what price is doing that week, because I don't want to get too confused. Because if you see too many different lines, you can get too scared as price begins to vibrate. And so that's the level there. Price cleared that point. That's the blue line I just showed you. Cleared that point there, came back in. We were in, and I repeat, I called this on my group the night before, and I have students who made money. We were in here, literally on our stop loss. Stop loss was there. And then our stop loss was there. Now, I went in on this trade with 20 lots based on my account size. Nah, it's not too difficult doing 20 lots, because I went in slightly lower because my what you would call it now, my stop loss was 5 pips. It's on my Instagram account. Go check it out. My stop loss was 5 pips on this trade. Because I really wasn't expecting it to come all the way to the end of the zone. And so I kind of cheated a little bit. And I think whatever it was 5 pips. And based on that 5 pips, I got out at this line here. See this line down here? This is why I got out. Actually, no, slightly above it. So I think I got out just above, well, my price broke through the line. And then when it started coming back, I got out. I did roughly 4-1. Which on my account, based on the risk I took, worked out about just under $4,000, 3,900 and something. I did tell my students, because I just come off a plane, I literally set the trade in the night before on a plane. I got on the plane literally as the day was closing. In the 5 minutes in between boarding, well, no more than 5 minutes, maybe about 15 minutes between boarding the plane and then taking off, I opened up my phone, saw what happened, crudely set my stop loss and my take profit. Woke up the next morning, came off the plane in Amsterdam and then London, and the trading trigger in Amsterdam, I was tempted to just buy at where the price was, but I told myself, be patient. And surely, in between my connecting flight from Amsterdam to London, it triggered. And when I came off the plane in London, one of my students came to pick me up, actually, and I showed them that I was already about a 1% in profit, or 1-to-1 in profit. I got out of 4-to-1 because I had to go sleep. Being a Friday, I didn't really want to jeopardize my profit. But I told those of them who are awake, they know what to watch for, to hold. And it went up all the way to 2, 3, 4. That's a 1, 2, 3, 4. I'm doing 1 second. No, I tell a lie. I want to be honest. I actually, well, I called this. No, this is why I got in. I got in here, seeing as I wasn't going to be in front of my phone. I didn't want to be too precise. So I got in there and I used this actually to cheat. I used this place there, this liquidity profile, because I was hoping that price wasn't going to get to the halfway point of this one. So that's why I got in, and 1, 2, 3, 4, there we go. That's why I got out with 20 lots. So that's 4% of 4-to-1. That's why I got off here at this point. It then gave another 2 1-to-1. So if I'd stayed in, I'd have made roughly $6,000 for the day as opposed to $4,000. But hey, who says no to $4,000 in half a day's work simply from correct price action? And so that's pretty much how it works. You go into a week with a day with a directional premise. While I scalped and I showed my students scalping little, 10 pips here and there, this was the move we were waiting for. We're waiting for price to get down to this level. Come back to this chart right here. Waiting for price to get to this level. Now, if you can't wait 4 days to make 4 grand in 1 day. I can't help you. I repeat, if you are trying to be so slick, you think you're slicker than the average, and if you love the sound of the when you click a trade on MT4, it makes a sound like a door shutting. Some of you are addicted to that sound. You got itchy fingers. That's what a demo's for. And if I show you my demo account, you'd be surprised. I lose money on my demo account. You know why? Because on the demo account is where I try out every last silly piece of, I keep my risk management rules the same, because like I teach my students, if you get into bad risk management on a demo account, it will carry over to a live account. If you chase losses, if you over leverage, it will show up. But in terms of trying out, if you're bored and you want to see something, do it on your demo. So if you want to say, oh, will that pan out? Do it on your demo, because I know paper trading isn't that fun. You want to be able to show that you actually won the trade in results. Great, do it on your demo. But on your live account, on each currency pair, if you're a day trader, you're looking for literally 2 or 3 entries a week. If you're an intra-week trader, you're looking for one magic one. And for me, that magic one was Thursday night. I waited Monday, Tuesday, Wednesday, Thursday, doing nothing on my live account, except a couple of quick one-to-one scalps. Even as price was coming down. I knew it was coming down, or I thought it was coming down to that level. But why didn't I take a long-term, say, a couple of days? Because my overall bias for the week was bullish. And as you can see, it did end up, the week closed slightly. This was a Friday, and then this is a Thursday, and then a Wednesday, a Tuesday, and a Monday. So the week closed slightly higher than it began. But it could have taken off. I could have been wrong about my signal. My scenario was correct. My signal could have been wrong. Price could have taken off from here, from at this level, or that level, or this level. And so I'm waiting for the confirmation. And notice at none of the other levels did this happen, right? Did this, well, you could argue it happened here, but that wasn't at the level I was looking for. It gets to my level, scenario is intact, it gives me my signal. This is my entry pattern or entry technique. My money management told me where my stop loss was to go. And I had, like I showed you, there was a line here that isn't on this chart. There was a line roughly there. I had 2 choices, I had 3 choices of exits. Technically 4. This level, that level, this level, or that level. Why did I choose this one? I did expect it to go back here. Let me show you why. Again, let's flip the script to the new share. Right, so let's look at this. What's so spectacular about that level? Simple. Right, let me draw that line out for you. Again, all I'm doing is working off previous price action. If after showing you this for free over and over again, you still are too lazy to draw lines on your chart, I can't help you. You see that level there? Let me take this away so you can see it carefully. Here, this one here. This is what I call a real price action pivot. Forget the fancy calculations you do. Price doesn't respect the calculation, it respects itself. And so that level there is also respected there. If you're a Christian, there's a scripture that says, in the mouth of 2 or 3 witnesses, a matter is confirmed. If price gives you 2 or 3 reactions at a level, and I'm looking for levels where it reacted both ways. I want to see the same level used for support and resistance in the previous time range. And the time range depends on what time frame I'm trading. But in this case, this was just last week. So Friday, Thursday, Wednesday, Tuesday, Monday. So this was Thursday and Friday last week. And what do you know? Friday this week, price respects there. But I also had this. So let me put this on again. Yep. So I had these other levels to respect. Now, why did I choose that one? Very simple. This is where money management comes in. I'm going to be throwing a bit of risk and money management now into a lot of our work together. If I knew my exactly if I think that was my stop loss. So I am prepared to take a few, except if I'm scalping, I'm going 1-to-1. So if you see me put up results on Instagram where I'm making roughly $1,000, just over $1,000, that's a scalp. It means I was in or out. I had a brief period of time to mess around. But if I'm trading into a week, I'm going minimum 3-to-1. And I will take a couple of losses. Hear me? I would take a couple of losses. I repeat, I will take a couple of losses where I was in 1 or 2% profit to hold on if I'm not scalping for 3%. I'm so confident in the principles by which I trade that I expect over the course of a bad month to bat 50%. If it was a bad month, I expect to be 50%. There have been months where I've been 90%. I've gone 2-3 weeks at a time without losing a trade. But there are going to be the odd times, like I tell every trader, prepare to, at least once in your life as a trader, which is why you risk manage correctly. Be prepared to sit through 5 to 10 losses on the bounce consecutively. This usually happens when the market's changing profiles. It's only ever happened to me once, but be prepared for it. The concept we teach at Digital Keys Wealth Academy, you shouldn't do more than 3 trades at a loss. And that should be because you failed to spot the fact that the market profile was changing. We teach about market profile in our course. But even if you're backing 50% over the course of a month, if you're holding out for 3-to-1, it means that for every 2 trades you lose, if you win the third, you're in profit. So if you lose 2 and win 1, you're in profit. If you lose 3 and win the fourth. So if you hold for 3-to-1 and your average is 25%, you break even. Think about that. You're going to be wrong 3 out of 4 times on your trades and still break even, not lose money. Anything better when you're in profit. And if you are right 3 out of 4 times, which is not uncommon around here for us, then you're going to be winning 9% to every 1% you lose. Just think about that. And if you're risking 2%, which is the maximum amount I will let my students risk with my knowledge, then that's 18-2. That's 16%. That is bonkers. And so I have 3 institutional levels here that I expect. Now, of course, my bias for the week is long. So I expect it to at least clear Monday. This is Monday here, right? Because I am going to sleep and not awake to watch it. I don't want to lose my profit for the week because this was the first meaty trade I got all week. I was conservative. I didn't hold out for the full range, which I suspected was going to be there. That's why I said students to leave it in there. I have certain institutional levels. This is roughly the same as this. I just took it a few pips short in case it respected the open of the week or the high of the week already. So I shouldn't remove that. That is roughly there. Right. So let's look at this. This level here is 1%. Am I stopping at 1%? No, that's a scalp. I'm not scalping. This was an institutional analysis. This is 2%. This is 3%. And so any of the first 2 levels would not have got me to 3%. So I'm either not going to take the trade at all, or I'm going to hold for at least 3. Does that make sense? I'm either not taking the trade or I'm holding for at least 3%, except I'm scalping. This is the next level, which is at 4%, which is roughly where I got out. So once price got here, not being greedy, knowing I was sleeping and not wanting to lose money, I got out. Now you see what happens at that level. Price starts to retrace, tags the level, and then goes back up again. I did wake up when it came back down there. I literally woke up about a few minutes after my trade had closed. Actually, no, I woke up actually while sleeping and then closed my trade. I think I set my take profit for 5%, sorry, but then I closed at 4%. When it came down, I told my group I'm tempted to re-enter here because I kind of guessed this was going to happen. In a Friday evening, I'm not too sure, and so I'm not taking risk. Then it goes up another 3%. Once it gets here, I told all of them get out. Once it got here, I told all of them get out now. Why? It's a Friday. Monday is usually a funny day for the suckers, and while it could keep going up on a Monday, it's very likely that there is some form of manipulation on a Monday. And that literally, ladies and gents, is how you do it. Scenario, signal, entry technique, and then trade management. So on psychology, meaning how I pick my exits, my risk to rewards, all those kind of things. That's the fourth thing. That's the trade management aspect. And all it really is my bread and butter pattern, weekly for the bias, weekly for the general direction, and where we are in the range. So based on a weekly chart, I drew out my Fibonacci range. I expected a reaction somewhere around 61% or lower. I got my daily engulfing. It's a powerful directional bias. Daily engulfing here. Once it engulfs, I wait for price to dip back down. To dip back down into the engulfing area, which is this line you see here. See this line there? Let's look at this on the 4-hour chart. That's that line there. Let's look at it on a 1-hour chart. There it is. And on a 15-minute chart, it's this one here. Actually, no, it's not that one there. It is, yeah, it's this one here. It's this one there. So it's that level there. And so cleared it. I wanted to dip back into it, take out some intermediate liquidity here, and pair up with a liquidity profile at the old resistance turn support. Well, if I was trading this live, I would have actually taken my entry literally as it came out the zone, or with the confirmation 15-minute bullish engulfing. But since I was on a plane, I actually set a faith order, I should put it that way. Again, this is the power of not over leveraging. If I had lost this trade, I would have lost 1%. You shouldn't really be trading anything, any account size where 1% will make you cry. Does that make sense? If 1% of your account losing makes you cry, you have too much money in your account, use it. In my case, the money I'm trading is not all mine. In case you're wondering if I'm some mega millionaire, I'm not. Money I'm trading is not all mine. And so when I average out every person's dollar in there, I've got money from family, money from friends, when I'm trading on their behalf. When you average out every single dollar in there, the average falls to what each person could afford to lose in a date with their significant spouse or significant other, and not cry. And then we go. Find your signature setup. Use the concept we teach. Please like, subscribe, click the bell for notifications. We're trying to get to 100 subscribers this coming week. We've only literally started posting on YouTube a few weeks ago, and then we took a 3-week break, but we're going to try and get to 100 over the next week, and then we're going to try and get to 250 before the end of the year and grow the channel from there. Learn how you can book private tutorial lessons or be part of our mentorship group for beginners, intermediate, or advanced traders. Email us at fx@EURUSD.UK or send us a message on Facebook or Instagram at Israel Keys Wealth. Take care. Bless you. Have an amazing weekend. Bye-bye.